We may have copy of the purchase agreement. Do I need a copy of the purchase agreement? Yeah, cool.
Sorry, guys. What is going on? Okay. It was just a white screen for a while. I was like, I'll just download an RPA real quick and then I'll hop on so soon.
Oh, okay. Let me,
What are you talking about? What are you talking about? Where do you get an RPA? From Zip Form.
Printed a copy of the document. Or you printed it from us at forms?
Mm-hmm. Download. Okay, it's not like this doesn't take forever. Cool. Great. Now, where do I get back into Chrome? Okay. How do I add another screen? Tab. New tab. Yay.
Okay, so now.
Try to print again, see what the name is.
Yeah. Mailroom, here, the black and white, right?
Or backspace.
Or backspace, or new space is the colored one on the other side.
Okay, we're getting in. Getting there. Okay. Okay. Okay, I'm back. And now I just need to know how to cast my screen.
Yep.
The other tab. The person or the dog?
No, the dots.
Yeah. Screen and training room. That's not on. Or it is. Stop casting. Sort screen, training room. It says that it is casting, but it is not.
Oh, yeah. Just had it.
I think so.
No.
Yeah.
Yay!
Perfect. Rocky and rolling.
All right, now I have to get back to the Zoom and do a screen share. Okay, guys, we are ready to go. Finally, woo, woo. Okay, so today we're going to talk about residential purchase agreement. Just so you know, I'll be screen sharing the entire class, so I do not monitor the chat box at all. Please speak up if you have questions. I use a lot of acronyms because I came from escrow, and escrow officers are famous for acronyms. You guys probably don't know what those acronyms mean, so stop me, correct me, remind me so that I can better explain. Sometimes I make mistakes. I say buyer or seller instead of seller or buyer. Let me know. All right. And the whole point of this class is that you understand everything. So if you're not understanding a concept, let me know. No dumb questions. There's probably a different way or a different example I can use to illustrate my point, and I'd like to do so. The residential purchase agreement is the most important document that we work with. It is also the most complex. That's why I teach this class in 2 parts. Okay, so it is very unlikely that if this is your first residential purchase agreement class, you are going to understand all of it. That's okay. That's normal. Keep coming back. My classes, particularly for contracts, require pre-reading of the contract. So if you have not read it, please do so as soon as possible. Continue to read the contract until you understand it. The contract is a roadmap for everything that could possibly happen once an offer is accepted. Okay. We are going to go over what the standard terms are for most contracts in our area. Just keep in mind that standard practice in real estate can differ area to area, and I'll talk about some of those differences as we go throughout, and that everything in real estate is negotiable. Okay, so I will talk about what is standard. I will talk about standard deviations and the resources of where you need to look in case you purposely want to write terms into your contract that deviate from what is standard. Okay, all right. Anyone have any questions before we get started? All right, so all contracts are accompanied by certain disclosures, okay? And so you'll see these several disclosures in the beginning of our contract, starting with a real estate agency relationship disclosure. You'll need to read this. Why? Well, you need to understand them, but if your clients have any questions, you need to be able to answer them. It's a pretty straightforward disclosure, all right? So I'm not going to review it. But please do read it. You are responsible for being able to explain this and knowing what's in here. Okay. Fair Housing and Discrimination Advisor. It's a federal, it's a fairly new disclosure. Okay. Remember, I told you yesterday, if you were in class, about revised dates. All documents that are provided to us by the state, which is what you would get out of zip forms, have a month and year here, and it tells you the last time they were revised. The state can revise documents and contracts on us at any time with no notice. The only time we ever hear about it is when there are massive amounts of changes, particularly the contract, which typically happen toward the end of a calendar year and are rolled out and put in place, toward the beginning of the calendar year. Okay, so again, read all of these disclosures, possible representation of more than one buyer or seller, disclosure, wire fraud, and electronic funds transfer advisory. I am going to say something about this real quick because it sounds kind of scary. So I will have clients who ask me about it. So what has happened is that criminals committing fraud have somehow found out about a real estate transaction taking place, and they have posed as escrow or title, sent fraudulent wire instructions to a principal. A principal, remember, is what? Buyer or seller, right? First party to contract. And once these funds are wired out, they're impossible to recover, which probably means your real estate transaction is not happening. So if you're working with a seller, it's unlikely that they're going to wire funds anywhere, right? They're usually going to receive a wire in the form of proceeds, though not always. But for a buyer, they're going to be wiring funds to escrow. And you can let your buyer know when we open escrow, escrow will send you an encrypted email, okay, with wire instructions. We will together call escrow. Okay, this is a great time to familiarize yourself and your client with your escrow officer, because escrow is such an important party in your transaction. and you will verbally verify those wire instructions before your client ever initiates a wire transfer. All right, so as the agent, you are going to make sure that you help them with this so that you are never in the position of this type of fraud taking place with your client. Okay, here we are, the main event, the California Residential Purchase Agreement and Joint Escrow Instructions. Keep in mind, there are different types of purchase agreements. There's a vacant land purchase agreement contract. There's an income property purchase agreement. There's a new construction purchase agreement, although I tend to prefer still using our regular purchase agreement. It was drastically changed in December of 2022. And in my opinion, it is much easier to complete because they have made the first few pages the location of where you write in all of the terms. It used to be scattered throughout the contract. At the top left-hand side where it says date prepared, this is the literal date you've prepared the offer, the contract. Okay, it's a legal reference date. And this date is important because if you modify terms or you take contractual actions based upon the terms that are written into this contract, if the offer is accepted, these subsequent documents will reference how they're related to the transaction. They will reference the residential purchase agreement, and at the top of these documents, it will ask for the date of the residential purchase agreement. Okay, so this legal reference date is very important. Section 1A, this is an offer from, this is your buyer's name. You want to check with your buyer or buyers, and you'll want to make sure that you have their legal name, because most buyers, well, they're purchasing with a loan, they're going to need to be notarized. So if you have a husband and wife that were just married, if she's changing her name, she needs to make sure that she has updated identification with her new name. If she is going by her husband's last name, but that's not her legal last name, you need to write her legal name in here. Also, like for a husband and wife, you don't say Mr. and Mrs. John and Jane Smith. It would be John Smith, comma, Jane Smith. There's more than one place to type in a buyer name here. What other type of buyer can we have? We can have a natural person, we can have natural people, or we can have an entity buyer. An entity would be something like a trust, an LLC, a corporation. Keep in mind that if your buyer wants to make a purchase in the name of an entity, oftentimes lenders have issues with lending to entities, so you'll want to check with your buyer's loan professional. Also, if you are dealing with an entity seller or an entity buyer, there may be additional documentation required depending upon when the buyer's name is switched to an entity. It's called an RCSD, Representative Capacity Signature Disclosure Statement. It is referenced. Entity buyers and sellers are referenced in this contract. So we'll look at that subsequently, probably in part 2 of residential purchase agreement class. All right. The property to be acquired is blank. Okay, so this is the street address situated in blank city. It is very important that you have the legal city in here. All right, and why do I say that? What does that mean? Well, we have a lot of what are referred to as area names in Los Angeles. Los Angeles is a massive city. So like Venice, Hollywood, Encino, Sherman Oaks, these are all city of Los Angeles. Okay, independent cities are Beverly Hills, West Hollywood, Culver City, Santa Monica. You go down south, Redondo, Manhattan, Hermosa, El Segundo. Little rule of thumb, it doesn't always hold true, but if there's a great school system, most of the time it's an independent city. If you're not sure if something is city of Los Angeles or not, who can you check with? Come on, guys.
Google?
No, not Google. Because I've seen Google say the legal city and the area name. MLS as well. Who can we check with? Title, yeah. Ask your title rep. Access your title software that they provide to you. Okay. All right. County. Okay, so you should be able to get that pretty easily. Zip code, and then assessor parcel number, more commonly referred to as APN number. I very often see offers that have the APN number blank. No, faux pas. An APN number is very important to escrow, title, and lender. Okay, legally it is a stronger identifier of a property than its address, than its street address. Okay, so make sure that the APN number is filled in, and an APN number is in a 4-digit - 3-digit - 3-digit format if it's in the county of Los Angeles. If you see anything other than 4-3 - 3 digits, it is located in a different county. Okay. On a rare occasion, you will not be able to find an APN number. Okay. This happens typically when we're dealing with new construction, a recent subdivision, or guys, I'm drawing a blank. Can anyone remind me the name of when you combine parcels? Whatever. Combining parcels has an actual name, has a technical name. So an assessor parcel number, that's a lot basically, okay? That's a lot on which any real property sits. Or, sorry, it's a lot. It doesn't necessarily have to have real property on it. So you can combine those lots, you can subdivide those lots. It's a long, complicated process, but that might be an instance in where you can't find an APN number. Also, I see something in the chat box. Thank you, land assemblage. Yeah, that's one of the terms. There was something else, but it's okay. My family did it on some property we own, and I forget. It doesn't matter. It's not important. In any case, the other circumstance in which I have seen APN numbers missing is when it's a condo and the condo property or the entire property sits on a land lease. Okay, a land lease is when the land is not owned on which the structure is built. And this can cause some issues with lenders and title companies. Only certain ones will actually make loans and provide title insurance on those types of properties. And that's totally fine. Not plottage. It's okay. We can stop guessing on the combining the lots. But I appreciate you guys. I haven't heard anyone at home, not a single sound. Are you guys speaking? Huh. Maybe I need to get Joshua. Okay, you guys are speaking and I just can't hear you. Thank you. I assume it just needs to be turned on here. Okay, can someone at home say something?
Hello, hello, hello.
Hey, we're
Hello,
missing. I apologize.
Hey there.
Giving you guys a hard time for not participating, and you probably weren't. Thanks. Okay. Let's move on to section 2, agency. So we are the very first disclosure that was part of this package. The AD, the agency disclosure, it says that it's attached here. And then here's confirmation. So again, you don't want to leave this section blank. It's all, guys, I can't with the chat box. So confirmation, seller's brokerage firm. So this is going to be the listing agent's brokerage, their brokerage DRE. And you're going to indicate whether or not the listing agent is representing just the seller or both the buyer and seller. And remember, guys, dual representation means any two agents from the same brokerage. It doesn't have to be the same agent representing both the seller and the buyer, right? So Vita, if you and I do a deal together, you represent the seller and I represent the buyer, you accept my offer, we are in a dual agency transaction. Okay. So you'd list the listing agent here, their DRE number. And if you're writing an offer, it would be Keller Williams Beverly Hills under the buyer's brokerage firm, our DRE number. You would indicate whether or not you're representing the buyer or dual agency. Honestly, if you check dual agency at the first one, it's going to autofill here. your name, your DRE number. Okay. For section C, okay, is for when more than one brokerage represents buyer or seller. And so this is two brokerage firms representing one of the parties. And if that is the case, you would check this box, you would indicate who, right? So it could be that there is a listing agent from, Compass and a listing agent from the agency, right? You would have to check this box. And even though you wouldn't be the one really having the information fill this out, this CAR form would auto-populate. It'll populate back in your document screen on zip forms. ABA, which stands for Additional Broker Acknowledgement, and that will be part of the contract and needs to be completed. Potentially competing buyers and sellers, that refers to the disclosure that was included prior to us coming to the contract in this package. That's CAR form PRBS. So it says that it's attached here. Terms of purchase and allocation of costs, section 3. This is where we start what the really important part of our completion of the contract when we're writing an offer. All right. So section 3A is purchase price. Guys, who decides what purchase price is being offered? No, the buyer, the seller wishes they did. I know it sounds like a tricky question, but I always get someone saying seller. I've said it myself, I'm sure. So yeah, the buyer does. We can lead a horse to water. We cannot make it drink. Good luck. Remember, CMA is not just for sellers. CMA is for buyers as well. If you are fortunate enough, yes, Errol? Oh, we're saying hi. If you are fortunate enough to be working with an all cash buyer, you would indicate so by checking this field here to the right where it says all cash. I'm going to make this a little bit bigger. Okay, where it says all cash. I wish you many, many offers that are all cash. Once you check this box, certain fields will be made so that you cannot edit them. Fields regarding loan, because you don't have a loan if you're writing a cash offer. However, there are instances in which you might have developer clients who want to write an offer as all cash, reserving the right to obtain financing. I will talk about what I do, what language I use, and what field I use to make that option further down in the contract. All right, section B, close of escrow. There are two options here. One is a certain period of days following acceptance of the offer. And the second is a finite date. It is very uncommon to use the second option of a finite date. And the reason for that, guys, is because we cannot control how long it takes to get an offer accepted. Okay. The sellers could be traveling, they could have multiple offers, it could be a multiple counter offer, like several rounds of singular counter offer process. I have literally had a counter process take me more than 3 weeks before. I would be in some trouble if I had written a finite date in to my contract for the close of escrow. If it took 3 weeks to get my offer accepted, right? It takes time to complete all of the tasks that need to be completed in order to be ready for closing. Inspections, particularly the lender's work, appraisal, getting the loan approved, all of that. It takes time to receive the reports, go through the disclosures, all of that. So it is more standard to use the first option of a certain time frame following the close of escrow. Can anyone tell me what the most common time frame we write into this contract is? What is common in our area? 30 days. Second most common would be 45. Okay. It is very difficult to close a deal with a loan in less than about 3 weeks. And that's like ideal situation. Ideal situation. Don't. And you might be able to do it sooner. It might take longer. Ultimately, before you decide to even write 30 days in here, you will need to check with your buyer's loan professional to make sure they're able to perform in the amount of time that you're writing into the close period. What was your smile for, Errol? What do you want to say? Did you want to say you can close it sooner?
No, it's just that with the market the way it is now, it's pretty common across the board. There are lenders who close in less than 30 days.
Absolutely, but if your buyer has non-standard, non-W2 income, probably not. Probably not. Depends on what area you're working in. Most of my buyers here have some pretty convoluted sources of income, as do I, on purpose. In any case, not up to us. Just keep in mind, like, it's very unrealistic to think that a buyer's lender can close in less than 3 weeks. But it's possible. It might take longer. You need to check with that buyer's loan professional. Also, even if it's an all cash purchase and there's no loan involved, if the listing agent doesn't already have things ordered and open, it might be hard to close in less than 10 days. Okay. If they have everything open and ordered, including retrofitting work, all of that, we'll talk more about that if you don't know what it is subsequently in the contract. It might be possible to close in as little as a week. Probably depends on what day of the week you open escrow and how good the escrow officer is. All right, expiration of offer. The way that our contract is written, it says that the buyer's offer expires 3 calendar days after all buyer signatures or blank date at 5 p.m. or whatever you modify it to be. So it is very rare that a listing agent and seller actually feel pressured to respond to a buyer within the amount of time that the buyer is written on here, if they feel very confident in the sale of their property. Okay. On a rare occasion, I'll find a newbie out of area agent or something, and I'll try to sweet talk, sob story my way into pressuring them to accept my buyer's offer right away because I'm concerned about competition. That may or may not work. It depends on what the listing agent knows. Okay. And if I'm a listing agent and I have 10 offers on my property, do you think I care what date you wrote into the expiration? No, I will get back to you when I'm good and ready to. When my seller and I have explored all of the options and done everything we need to do to make sure I'm positioning my seller for the very best outcome. If your buyer is serious and interested, they'll respond when I respond to everybody, right? So I just don't want you to give this expiration too much weight. On the flip side, I do want you to know that a lot of listing agents ignore this expiration date. They will let your offer sit there, okay? And they will still tell people they have offers after those offers have expired. So if you're the listing agent, you do have to be cognizant of this. And if you are going to respond, like with a multiple counter offer after a buyer's offer is expired, then you may have to extend the expiration in the counter offer or ask the buyer's agent to send over an amendment to their offer extending the expiration. Okay. So keep that in mind, because if I have 2 offers in hand, one of them expired yesterday and one of them is valid, I'm in a gray area if I'm trying to send a multiple counter offer. Technically, I'm not doing it right if I'm trying to write a multiple counter offer to both of them today, because technically only one of them is valid, right? If one of them expired yesterday, I only have a single valid offer. Therefore, issuing a multiple counter offer is not ethical. So what do I need to do in order to issue that multiple counter offer? I need to get that buyer's agent on the one that expired yesterday to extend their expiration in an amendment for me. Most of the time when you're in that situation, you don't have to worry about it because you have more than one. As long as you have 2 valid offers on the table, you can issue a multiple counter offer. I just want you to be aware of these dates and careful of these dates so that you don't put yourself in a position where you're doing unethical things without knowing. Well, don't do it knowingly either. Please, especially don't do it knowingly. I just don't want you to do it accidentally. All right, initial deposit amount. All right, so there's something special about the initial deposit contingency. This is referred to as the earnest money deposit, EMD, initial down payment. Okay, so what is our typical percentage of the purchase price that is offered as the EMD? That's
Three.
the total down payment. 3% is what is industry standard in this area. Can you do more or less?
Yes.
Yeah, absolutely. What if you do less? It's less attractive to the seller. What about if you do more? It can seem like a slightly stronger offer, although, you know, technically an earnest money deposit is, well, not technically, legally, an earnest money deposit is not available for a seller to go after unless a buyer has lifted all of their contingencies and yet failed to close escrow.
Mm.
So earnest money deposit is
Kristen.
probably more, yes.
Can I ask a question regarding that? Somewhere along the way, I heard that we weren't able to offer more than 3%. Or the seller doesn't have the right to go after more than 3%. Can you give some clarity around that?
Yes, I will when we get to section D2.
Okay.
I'll tell you why. Yeah. So you can offer more than 3%. The thing is that we have a liquidated damages clause that limits us to 3% in our contract. And I'll talk about how to offer more for a deposit and still make it available to the seller. So it looks like so it is actually a stronger offer when we get to section D2 under increased deposit. It should really be offered under increased deposit. Okay. But it can be offered both ways if we use another CAR form, making that money available to the seller. In the case of the buyer defaults on the purchase after they've lifted all of their contingencies. All right, so can be more, can be less, 3% is standard. Really, this initial deposit, this EMD, is gonna set the tone for your real estate transaction. If your buyer doesn't get this money to escrow on time, it's a very strong indication to the seller and the listing agent that your buyer's not serious. So as the buyer's agent, please make sure your buyer knows when the deadline is of getting the earnest money deposit to escrow, that they know what the accurate dollar amount is, that you babysit escrow and make sure they get the wire instructions to the buyer in enough time for the buyer to deliver the deposit on time. And also, you'll need to make sure that your buyer knows they might need to physically go to their bank branch to initiate a wire. Okay. Sometimes wires 10,000 or higher, sometimes depending, like all wires, depending upon the type of bank, need to be done in person. Not always, but they should be aware of this. Some online banking institutions make it very difficult to get wires out. So they'll need to know what kind of time frame or if they need to transfer money around so that they can make a wire deposit on time. Also, wire cutoff times generally end for banks around lunchtime, somewhere in the 12 to 2 p.m. range. All right, so if your buyer waits until the third, well, it's standard for us to do 3 business days, and we'll talk more about that in a second, for our contingency timeframe for the delivery of the deposit from the acceptance date. So if your buyer's waiting until that 3rd day and they're going in at 2 p.m., chances are that wire, that initial deposit, it's not going to get to escrow that day. So I always advise my clients that if they, you know, sooner is better, but that they need to go in no later than the morning of that 3rd business day. Guys, chat box. I don't monitor chat box when I'm doing the screen. It interrupts the entire class. Please feel free to speak up with questions. We'll talk about escrow and title momentarily and the choosing of them. We're going to go over all of the terms. So if you have a question that is off topic, please try to wait. I guarantee you we're going to cover that in the contract. And if I still don't answer your question when we go over the section that covers the subject that you want to ask a question about, please then ask me questions. Otherwise, I will never make it through the residential purchase agreement in our 2 classes that I've allotted to go through it. Let's see here. So initial deposit is typically within 3 business days. This is a special contingency calculation. Most of our contingency dates, timeframes, they're calculated on calendar days, not business days. Can anyone tell me why a wire deposit for earnest money deposit, or sorry, a wire transfer for an earnest money deposit might be due based on business days versus calendar days?
Because we're at the mercy of the banks.
Yeah, the bank's not open, a buyer can't send the money. Simple as that. So unless the contract is altered, this is the only contingency in our entire contract that is based on business days. Well, it's not technically true. It's not calculated on it, but close of escrow can't happen on a day that's not a business day. And we'll talk about that. You know what? We can talk about it now. So let's say because you can't control what date your escrow closes, let's say when you get your offer accepted, you calculate out your close date and it happens to land on a Saturday, Sunday, or bank holiday. You cannot close on that day. It is typically standard to close 2 business days, this next 2 business days soonest. So if it lands on a Saturday or Sunday, you close on a Tuesday. Why? Why Tuesday and not Monday? It's because of funding loans. Once a buyer must in LA County fund a loan 1 business day prior to recording is closed. And it's common courtesy that we allow the closing to take place 2 days later so that the buyer doesn't have to fund a loan on a Friday, pay interest on a loan that's funded 2 extra days and close on that Monday. We would typically close on the Tuesday, fund on the Monday. Can you do it Friday and Monday? Absolutely. Can you move it up sooner and close on that Friday instead? Absolutely. That's negotiable between you and the listing agent and buyer and seller. But it is pretty industry standard that we just accommodate and move the closing to the Tuesday. Okay, let's see here. So we're talking about earnest money deposit. All right, so D2, increased deposit. Okay, so increased deposit is different from offering more than 3% of the purchase price in the initial deposit amount. What's different about it? It happens at a different time. Okay, so if you want to give an initial deposit of more than 3%, you would still use CAR form DID, just like you would for an increased deposit. And what this does is it clarifies that the seller can go after the additional funds past that 3% amount. Okay. So if you want to do an increased deposit, there's 2 ways to do it. You can do it on a finite date, or the way the contract is written, upon removal of all contingencies, or you can write something custom in. So an increased deposit, I don't see the strength of it at the time all contingencies are removed, because chances are the deal's pretty much, it's going to close at that point. The initial deposit's going to be up for grabs by the seller. It's pretty much a done deal. I mean, could something crazy happen? Absolutely. And if you're in this business long enough, you will see it. I have twice. But that's not the time you would want to do an increased deposit. And an increased deposit is usually 1, to entice a seller to provide a very long escrow, or 2, to entice a seller to accept your buyer offer when they have lots of options. So I tend to like to offer the increased deposit at the time my buyers lift the investigation contingency. Why? The 2 most common reasons escrows fall apart are what?
Inspection.
Inspections that can't be negotiated successfully, or failure to obtain financing. Yeah. Okay, so I like to, and again, loan contingency is usually the longest, so I just don't see the power or the weight in that offering an increased deposit at that time. So I tend to like to offer the increased deposit, and I check the second box here for or, upon removal of investigation contingency. And you can write a flat number in here or a percentage of the increased deposit. James, does that answer your question?
Not really. For some reason along the way, I learned that when we submit an offer and we want to offer 6% as the deposit, not increase, but like from the get-go,
Yeah.
that the seller only has the ability to go after 3%.
So not if you use CAR form DID with your offer with the larger percentage. And also you have to not have your clients, what page is the liquidated damages on? Page 14? Yeah. You can't have your client sign the liquidated damages. And then you can absolutely offer more than 3%.
Got it.
Okay, great.
Thank you.
Yeah, you're welcome. All right. Here we are. Section E1, loan amounts. All right, so who determines what percentage is down payment and what percentage is loan amount? Generally between the buyer and their loan professional. Usually works out as to whatever makes the most sense for them, whatever they're financially comfortable with. Does this amount change during the course of escrow? Usually, yes. And should there be an amendment for it? The way our contract's written, yes. Does anyone ever do it? No. Escrow, around the time they're going to get loan docs, we'll do something called a lender rate and term amendment that will clarify that. So I'm not too worried about these percentages changing when the buyer and the loan professional flesh out what the actual loan is going to be structured like. But it's pretty typical that a buyer is going to obtain financing anywhere from about 95% to 80% is the most standard, I'd say. Yeah. Can it be more? No. It can probably be less though. Yeah, it can be less. The buyer can bring more money in, right? As a listing agent, I'm a little more suspect of anything less than 10% down. And that is because I think the loan's a little bit more complicated. Is that correct, guys?
Not really.
For the standard loan officer, not you.
Yes, okay.
Or standard mortgage broker, not you. Yes, it can be trickier. There's more requirements, right? Yeah, there's more requirements. So as a listing agent, when I see offers with less than 10% down, I'm grilling their loan professional. And if I have two offers, all given terms the same, besides that, I have another offer that's the same, but they have more percent down, I'm probably going, unless there's a red flag somewhere, I'm probably going to lean into my sellers into accepting that offer with a higher percentage down with a less complicated loan. But again, I'm calling all of the loan professionals involved and I'm feeling them out. A mortgage broker that can't call me back, that's probably not a good sign. Someone who says, yeah, I can probably do that, I'm going to convey that to my seller, right? So just keep that in mind. I've had people ask me, if I know that the buyer is going to only put 5% down, can I write 10 in here? Technically, that's contract fraud. Does it happen? Absolutely, because no one finds out until loan docs are ready to be issued anyway. So nobody really cares at that point. That's all I'm going to say about that, and I will not take any questions on it. What?
What if a buyer has down payment assistance, like a second loan or?
I don't know. I haven't worked with down payment assistance. I don't think that program's even available anymore. I think the funds dried up for it. Honestly, the price ranges I'm working in, I don't think that's a thing. But you have two mortgage brokers right here in the classroom that you can ask after
Us
class.
too.
Let's see here. Where am I? Loan amounts. Okay, so the way the contract is written is that it's a fixed rate or adjustable rate. Again, we don't know what the actual loan product's going to look like by the time the loan professional and the buyer decide what they're going to have. So I don't change this. Okay, and then not to exceed percent. It is actually very important that you enter a number in here. Okay, sorry, where it says percent. Okay, it's very important you don't leave this blank, especially when we have a ever-changing interest rate. Why? For protection for your buyer. So if you didn't write anything in here, and at the time that your buyer's offer was accepted, let's say they were quoted a rate of 7%. Well, it's not typical that a buyer necessarily locks their interest rate until we know we're moving forward with a transaction. Okay. Well, what if interest rates jump from 7% to 10% in a week and a half? That could happen, right?
Full extreme. but-
It's a little extreme, but what if it even went from 7 to 8? That could happen. We saw that happen, right? We've been seeing stuff like that happen. Well, what if they no longer want to make the purchase? What if that would be a financial hardship for them at that point? What if they're not comfortable? If you had written anything 8% or lower in here, they have contractual protection to cancel the deal. They are contractually protected as long as they have not lifted their loan contingency. Okay. So don't leave it blank. Who would you get this information from? Who would you ask for a real estate number to write in here? Buyer's loan professional. Okay. All right, buyer to pay up to blank points. Points are a fee paid to buyer's lender, right? I don't get involved in that. That's not my business. I'm never filling anything in here. Okay. And then we have a section for FHA or VA. Okay. The lender can require a list of repairs or can require the seller to perform repairs. And so this time frame is in relation to that. 17 is pretty standard for that. You might want to shorten it to 14, but again, if you're going to change any contingency dates that affect the loan, it's not up to you. You need to check in with the buyer's loan professional. Okay, and then if it is FHA, VA, or some other type of financing, you would check that here. Can anyone tell me what seller financing is more commonly referred to as? What's the term we use? Seller carryback financing. This is when the seller has a free and clear property or has enough equity in their property to basically act as the lender to the buyer. Okay. So if a seller has no existing loan or they owe 100,000, but the buyer is giving a down payment that's large enough to cover closing costs, commission, and the outstanding loan balance for the seller, well, technically the seller can provide financing to the buyer. And there are very complicated forms for that. Good luck. I've done it once. It was hard. You can do it, but most sellers don't want to do it. They want their money. All right. Section E2 is if there was a second loan. Again, typically you're not writing an offer knowing what the financial structure of the borrowing is going to look like. So typically a buyer would not go into a transaction thinking that they're going to purchase with a second mortgage. It could happen, but I'm not typically writing this in. If this is the case, the buyer's loan professional is going to let you know. E3 is for occupancy type. So the way our contract is written is for primary occupancy, meaning the buyer is going to live in the property. If it's going to be secondary or investment, it needs to be checked here. Is a buyer always honest with their loan professional about this information? No. And you know what I say to my clients? If you have me write this as primary, la, 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 I do not want to hear that. Do not put me in that position. I cannot and will not lie for you. So I do not need to hear that. Why would a buyer lie about this? They get a lower interest rate typically if it's their primary residence. And a lot of times lower percentage down payment is required. Balance of down payment. All right, so in our hypothetical situation, the buyer is putting down 20% on $1 million purchase. How much is my balance of down payment?
17%.
17%, because remember, we've already offered 3% initial deposit. So it's gonna be 17%, which is how much, guys? 170,000 if it's $1 million purchase. All right, double check everything. Double check the bottom of the page where it says purchase price total. I am the queen of one too many or one too few zeros, making someone either very happy or very sad in my hypothetical world. Thank God it's never gone out that way for signature. But make sure purchase price total at the bottom equals what you meant it to say at the top. All right. Section G1. This is for a pre-negotiated seller credit to buyer. This is, yes.
Does the form automatically calculate or no?
The what?
Does the form automatically
It
calculate?
does automatically calculate. As long as you've entered your numbers correctly, it will be correct. Yeah.
Okay.
Pre-negotiated seller credit to buyer is not common. Okay, it is not common in our area. I do see it more commonly in outside areas, particularly like large housing developments with builder credit, like incentives, things like that. But it is not common in the greater LA area. It is not. So if you're going to have a pre-negotiated seller credit, who do you need to check with?
Listing agent.
No, well, duh. you need to make sure the buyer's loan professional is okay with that credit amount. Okay. They do limit what dollar amount a buyer can receive in credits. Okay. Seller credit to be applied towards closing costs or blank other. Again, so the seller is saying, I'm going to give you money to buy down your interest rate. You need to check with the buyer's loan professional anytime they're saying it's for anything other than closing costs. I think that's also allowed. Just make sure you're not the loan professional. So don't put yourself in a situation where you say, oh, that's allowed or not allowed. Check with the buyer's mortgage broker or loan officer. All right, we talked about writing a cash offer. Okay. However, maybe our buyer, particularly either high net worth buyers or builder developer clients, they want the strength of a cash offer, but they want the ability to borrow funds if they want to. Why? Well, a builder has a lot of money coming in and out, right? When they do obtain financing, most of the time it's hard money financing. So it is very similar because it's much more streamlined to a cash purchase. And then for high net worth buyers, borrowing money for them is not like for the rest of us normal people where it costs us a lot. The banks want their funds on deposit with them, so they will give them ridiculously low interest rate loans that the rest of us cannot have until we have millions and millions of dollars on deposit with a banking institution, with a financial institution. So if I use the additional finance terms, and I want to reserve the right for my buyer to obtain financing, I use the following language. I'm going to type it into the chat box. Buyer reserves the right to obtain contingency-free financing at their sole discretion. This contractually binds the seller and all of the other parties in the transaction, if this offer is accepted this way, to cooperating with the buyer obtaining financing. It does not give them contingency protection. They don't have the right to cancel the deal if they can't obtain financing, right? And they shouldn't, because that was the whole point. We wanted to give the offer the appearance of strength of a cash offer while still allowing the buyer the option of obtaining financing. So if your buyer doesn't actually have the cash to complete the sale as a cash closing, can you use this? Can you use this? No, you cannot. I mean, most developers are lying and they're going to get financing anytime. Just ask them. The point is, as the agent, you don't want to put them in this situation and say, well, what if you can't obtain financing? Are you going to be able to close the deal? Because they don't have the protection to do that. They don't have contingency protection in the case that they don't obtain a loan. Will you find some other way to get them out of the deal? Absolutely, because I'm going to teach you all of those things. But just know that you need to talk to your buyers and make sure that they know that technically they're supposed to close anyhow. All right. What time is it? I'm going to teach for about 15 more minutes, and then we'll cover the rest of the RPA in class number 2. Don't worry, it's only the first couple of pages that contain information that we need to go over and discuss. The rest of it are paragraphs that correspond to all of these terms that we're going over now that further explain them. So again, if you haven't read the RPA, read it. If you have, read it again until you know what everything here means, until you've asked me all of the questions in the world you have about it, until you've explored it and you know it back and forth. You haven't read it enough. Let's see. Section G3, seller agrees to pay the obligation of buyer to compensate buyer's broker under a separate agreement. CAR form SPBB attached. I believe this is a newer form. And this is definitely a newer part to the contract, or a new part to the contract. This is in the case, particularly for off-market deals where there's no agreement. There's no listing agreement. Okay. Notice I didn't say pocket listing, because a pocket listing has a fucking listing agreement, people. My biggest pet peeve. You do not have a pocket listing. You do not have a listing if you don't have a signed listing agreement. What's a pocket listing? It's a listing agreement with an SELM, seller instruction to exclude from the multiple listing service. Okay, you have a listing lead. So you need to cover on the listing agent side how the seller is going to compensate you. And you also need to cover how they're going to compensate the buyer's agent if that's not you. Okay. And so that can be accomplished in a few different ways. A single party agreement. There are different commission agreements, I think. But if it's not covered, or if you want to double cover it, as you should, particularly as the buyer's agent, because you don't have access to the seller the same way the listing agent does, right? You're going to write your offer subject to the seller paying you, right? Because where is it covered that the seller is going to pay the buyer's agent? Where is it typically covered?
In the listing
In
agreement.
the listing agreement. So if there's no listing agreement and you haven't seen it, how do you know you're going to get paid? Do you get paid for writing an offer that gets accepted if there's no listing agreement with commission agreed to? Absolutely not. The seller has no obligation to pay you. They have no agreement with you. So you need to facilitate this. And my recommendation would be to do it before you get to an offer, before you do the showing. But in the case that you haven't for some reason, or in the case that you want to make sure everything is really contractually solid, you're going to use this section. Okay. Section H1, verification of all cash. So if you had written for written your offer as an all cash offer, you're not going to alter this section at all. It's going to say attached. It already says attached to the offer unless you alter it. Guys, verification of a cash purchase or verification of down payment for a purchase with a loan should always be attached to the offer. It should never be modified where it's going to come after acceptance. Why? Why?
Makes it look stronger.
Yeah. I don't know that your offer is real. And if I'm listing agent, I'm going to advise my seller not to accept any offer that doesn't have a proof of funds. Because why should a seller has very, very little power to cancel a transaction. In fact, none after an offer is accepted. And so it is very risky to get yourself involved with any buyer that doesn't show you their ability to purchase. Okay. Offer is worthless without proof of funds. Now, on a very rare occasion, like I had one where I had a higher end listing, I knew the buyer's agent very, very well. Buyer was a celebrity client. Buyer was on a cruise. And if you've ever been on a cruise, you know, internet access is not the best on a cruise. Or they deal with a business manager. They're observing, you know, Jewish holidays or something. I really, really know who the buyer is. I can Google them, and I really, really know the buyer's agent. I might tell my seller, okay, we can consider accepting this and let them give it to us afterwards. But still, why not wait to accept it until they get back and they can send it to me? There's no reason to accept it unless there's a really compelling time, reason for time constraint on either side. And I really trust everyone involved. So same thing goes for H2. For H3, verification of loan application. Again, it should be attached to the offer, guys. It should not be delivered after acceptance, because a seller should not consider accepting any offer from a buyer who clearly has never spoken to a loan professional, because it's not hard. I think pre-qualifications are pretty worthless as it is, because most mortgage brokers will just write one. They'll just write one. I know that my mortgage broker has a template I can write if I really need to. I mean, he would never talk to anyone or never tell me to go ahead and do it for someone he hasn't talked to, you know, and I really trust my guy. I've been working with him for over 10 years. But, you know, pre-qualification is not a super strong indicator that a buyer can actually obtain the financing necessary to complete a sale. Why is that? Well, because what a buyer tells their loan professional is not always accurate. Okay. And it may be accidental inaccuracy even. Okay, so offer needs to have a pre-qualification letter. And you have options over here: pre-qualification, pre-approval, and fully underwritten pre-approval. Okay, what's the difference between pre-qualification and pre-approval? I think it's a conversation in documents, right?
Yeah.
Yeah. conversation and documents. So I don't usually know as the agent if it's pre-qual or pre-approval. I just say pre-approval. Usually the letter doesn't say. That's what I check. But I think if you know and you're mischecking, that's fraud, right? So you can't do that. Now there is a huge difference with fully underwritten pre-approval. That's also referred to as DU, direct underwriting approval. No?
So the fully underwritten is when it's actually been, the application has actually been sent to a bank, and the bank has underwritten the income and assets for the borrower, and all you're waiting for is a property to underwrite. the
Whereas
property.
DU is when it's run through the
DU is
machine.
Yeah, DU usually should come with a pre-approval letter. And it's just basically the loan officer, the loan professional, where they review the income documentation, they've run the credit, and they've submitted the application through Fannie or Freddie's automated underwriting system.
Okay, so in
It
an
hasn't
agent's
gone
world,
to-
it's pretty much the same for us. It's much stronger.
It's stronger than a.
It's much
standard-
stronger.
It's stronger than a pre-qual and a regular.
And it's
pre-qual.
uncommon because you have to run credit for it. And we typically try not to run the buyer's credit unless we know our offer is getting accepted. So when you see, particularly like when the market was crazy, you see these asshole listing agents who are like, send me DU. I'm like, no. I will, let you talk to my buyer's loan professional. I'll let you do all these things. But if you don't tell me that you're gonna, if acceptance of my buyer's offer is not like the only condition isn't just the DU, then I'm not giving you DU. Because every time a buyer's credit has a hard pull, it goes down a couple of points. Okay, credit inquiry makes it go down a couple of points. And can I do that if I absolutely have to? Well, I'm gonna call my buyer's loan professional and be like, can I do this without like really affecting my buyer? If they have phenomenal credit, yes, can absolutely do it. But you don't just arbitrarily do it, and you don't do it every single time. And as a listing agent, unless you're really, really considering that buyer's offer for an acceptance, it's not something that's really kosher to ask for. How about cross qualification? I'm sure you guys have seen listings where one of the conditions is that the buyer cross qualify with the listing agent's preferred lender. I ignore them until they force me to. I'll just say, yeah, and I ignore them. Unless I really don't know the buyer's loan professional. But again, I'm at a point in my career where I won't even work with the buyer unless they're working with my people. So in the instance that they force me to, I will have my buyer's lender black out all of the sensitive information on all of the documents that they've received from the buyer, the credit report, all the loan application, all of that, and I'll have them go ahead and send it over to the preferred lender. I'm not going to actually have the buyer get on the phone with the preferred lender of the listing agent. I want no one associated with the listing agent with my people ever. I want my people working with my people, and that's it. But again, you do what you've got to do. All right. Final verification of condition, also referred to as, final walkthrough. You've been doing your homework, huh? You haven't been with us for that long. Wow, guys. Final walkthrough. Okay, so what is the purpose of a final walkthrough? It is something the buyer does, right? What's the purpose?
Just to make sure the property is in the same condition as it was at the
Time you made the offer. Yeah. So to repeat that, guys at home, where it's harder to hear, the purpose of a final walkthrough, the purpose, as it's legally stated in the contract, is to verify that the property is in the same condition as the time the buyer made the offer. The second one is to make sure that any agreed upon repairs were completed. However, as the buyer's agent, you probably do not want to wait until the final walkthrough. You want to verify this stuff yourself ahead of time. And the unofficial reason for the buyer final walkthrough. Around this time, the buyers have given pretty much all the money they have in the world to escrow for the balance of their down payment and closing funds and closing costs, or they're about to. They haven't seen the property in a while. And it's a little bit of a lull, scary time for them. They haven't seen it. They're about to, or have given up most of their cash. And so it's a feel good to remind them of what they're getting. I oftentimes encourage my buyers to bring their parents or their best friends and whoever they wanted to show the property to at this time. A lot of times I'll bring a bottle of champagne if I think it's appropriate, because I want it to be a feel good appointment. It's a feel good. It's a time to ease their anxiety at this point. Okay. When does the final walkthrough take place?
3 days before.
It says right here, unless it's altered, 5 days or less prior to close of escrow. And it's a fine balancing act. I'd like to try to see it after the sellers have moved their things out. Okay. But as soon as possible prior to funding the loan in case there's a huge problem, so I can pretend that I have the power to stop the closing. So I can use it as leverage to bark and howl. In the case that the seller hasn't performed a repair or something like that. I don't actually have the authority to do that at that point, but most people don't know that. So I get away with it. So it's a balancing act. I want it to be as soon as possible, but if at all possible, after the sellers have gotten their things out. But who knows when that's going to happen? A lot of sellers, moving's a bitch, right? It takes longer than we expect it to. It's really bad. And sometimes sellers are moving up until the last second. So that's not always possible. Assignment request. All right. Assignment. I want to talk about assignment for a second. What's an assignment? Well, there are legal types of assignment. There are types that aren't generally allowed unless they're agreed to. And there are illegal types of assignment. There are some very skeezy people out in the world who call themselves wholesalers. They go around locking up property that is for sale as an escrow as if they are going to buy it. They have no intention of buying the home ever. What they're trying to do is sell the opportunity, sell the escrow to a different buyer and make money out of nothing, out of getting there and getting their contract accepted first. Totally illegal. It's fraud. If you have no intention of making a purchase, it hurts the seller. That's an actual damage, right? Cancellation has stigma. Days on market has stigma. So, you know, people like that, you don't want to involve yourself with them. You want nothing to do with them. You should report them. These are the kind of people that give our industry a bad name.
What would you report to the DRE?
I don't know. Ask Michael Rosales who to report them to. But yeah, DRE, tell the listing agent for sure. They should know. The type of assignment that is allowed is, let's say I made an offer, it gets accepted. I'm buying cash or my loan professional has given me the approval. I want to buy it in the name of my trust, Kristen Toll Trust. And so I'm going to assign my escrow from Kristen Toll to the Kristen Toll Trust. Okay. What's something that would be negotiated, but would still be considered legitimate? I can get a much better rate if my soon-to-be husband is now going to be on the loan with me. You know, I initially thought that I was going to make the purchase under just my name, borrow under just my name. And so I want to add him to the transaction. Does the seller have to agree to that? Absolutely. But typically they're going to, and this would be allowed. So anytime you're going to involve anyone that didn't compose the original parties, right? So like, even if I wanted to assign my escrow from me to my trust, but I was co-trustee with my husband or my brother or my dad, technically we're not the same parties. I'm adding a party. So that needs to be agreed to. All assignments need to be agreed to, but it needs to be presented legitimately. It needs to be presented honestly. And can the seller refuse? Yes, but why would they want to? Unless, you know, something happened where they think they can get significantly more, like if they received a backup offer for 200 grand higher, they might be trying to throw me out. They might not want to agree to it, right? But that's the only instance in which I can think a seller doesn't want to agree to something like this. Okay.
Question.
Yes.
So I just had a sale. It was the couple, and the husband first was applied for the loan and everything was on his name, but at the end, he was willing to add his wife.
Added a title, but not the loan. Yeah.
And they didn't agree with that because the wife.
They can do it after it closes.
Wife wasn't in this paperwork about loan.
Yeah. that's fine. They can do it after it closes.
Oh, after closes, but,
Mhm.
yeah, okay.
Well, no, if the loan professional doesn't agree to her being on title, the loan professional has to. You can have someone who's gonna be on title but not on the loan. That happens.
But
Um,
after escrow close, right? Because if they, in the middle, they, have to
it's up to the
review.
loan professional. If they can't close it that way, they can't close it that way. Yeah. And then technically you're not supposed to mess with vesting when there's a loan in place after close, but most of the time, nobody really cares. I would definitely, I wouldn't advise a buyer to do that though, because if someone does care and the loan gets called, given some bad advice, so I just stay away from that. All right, we're going to call it a day for now, and we will start up on section L1 for loan contingency when we resume next Wednesday at 11. Remember, I'm going to be on Zoom only next Wednesday because I will be in Palm Springs getting married. Please don't bother me unless you have to. If it's important though, I will find the time and fix it for you. All right, does anyone have any questions? No. All right. Well, thank you guys very much.
Thank you.
Thank you.
Thank you, Christine. All the
Congratulations.
best.
Thank you, thank you.
Yeah, hold on. Hello?
I love your. At a Airbnb that we sold to the client. Yeah. Thank you. Yeah. You change that under the settings section somewhere. It's tricky. It's hard to find, but you'll find it.
Yeah, I was looking, I'm
You
like,
can call them if you can't find it. I think I had to call them last time I was brokerages. Yeah, it's tricky.
All right, thank you.
Yeah, you're welcome. Yeah, there's two places for address. You change it in one place and then it's like some other place.
Right,
Yeah.
right. And I changed personal information, but I couldn't find it.
Yeah, I know. It's some other weird place. It's hard to find.
All right, thank you.
You're welcome. Thank you. Thank you. Thank you. That doesn't surprise me, Richard. All right, don't get that.
No, manager's amazing.
I was fired about
It's
6
amazing.
years later.
Don't say that to a person who's getting married, Richard. He's supposed to be encouraging her. Marriage is good.
Yeah.
I mean, massive bath.
So John, he said, one.
He said he's okay.
Okay, so you wanted this room? But
The question is about
Oh, yes.
down payment assistance.
Yes.
So, very important.
Typically it is.
But they still have.
Yeah, there is options available. They're very hard to get.
Really?
Yes, and I showed that there was everything, I don't know, she made some notes. And I think she's gonna talk to James, what she's gonna do. If she wants to have shade for the kitchen and the dining. Oh. Yeah, but I don't know if you.
Asking him what down payment. I don't typically talk to.
Yeah.
I sell to investors.
Yes.
Not working.
No. I will have to figure it.
And this one I feel.
No, I don't know what's.
Something came.
No.
Oh, it's working now. That's what switched.
So that's on one, let's.
Okay.
You know, the record.
Yeah.